want to just start out by saying that, the reason I don't kind of dive into and commentary on the news, CPI, inflation, et cetera, is that it really doesn't matter. What matters is how the markets are reacting to it. And this morning, the CPI came in a little bit favorable, and markets started pushing higher, and now they're sort of came down a bit more in equilibrium. So on the weekly basis, we can see that it's holding the 50-week EMA. I'll come back to that. But on the whole, it's also sort of rejecting this 84.5 level. And so again, that's that midpoint of the vector candle, or the fair value gap. How many of you guys saw the video that I did on the fair value, or I shared on the fair value gap, to help explain that? Because I've done my best to explain why these happened and in the past, but that was a very good explanation. So if you didn't see that, go back up in the chat and look for, you can search in Signal, by the way. There's a magnifying glass, and you can search for just FVG, fair value gap, and there's a video on there by The Secret Mindset. And so maybe a little bit more than many of you want to know about, but some of you, it explains why price often revisits certain levels. And to expand upon that, I'm not sure if I want to go into it, but a fair value gap also is a candle pattern. I'm seeing if I can find one where sort of the body of a middle candle is above the high wick of the one below and below the low wick of the one above. Some of you are now paying attention, saying, what did he say? So I would watch that video for that. It's not something that we want to get into, because you can get into the weeds with that, but it's worth watching. So anyway, yeah, let's not go down that road. If you want, well, don't DM me. I got a pack today, guys. I'm leaving tomorrow. But anyway, all it really matters here, though, is are we above or below support on Bitcoin? And currently, we are finding resistance at the prior fair value gap, the midpoint of that candle right here, right? So these big candles are when market makers, there's supply and demand imbalance. The buyers and sellers are in imbalance. And so the market maker fills those orders. There's an imbalance there. It goes up and up and up and up. But at some point, they like to come back and revisit these levels. And so that's also why there's a lot of buyers down here around 71,300. There was this big fair value gap here that kind of pushed up. By definition, not fair value gap, but these big candles, these vector candles, are the market makers kind of repricing structure. So with that, what do we do with that? I don't know. Though we broke to the downside on this. This was sort of a symmetrical wedge forming here, so we'll take that off the table. So what did we have? We had support here at the midpoint of that vector candle, held, bounced, broke, and now we have resistance. I don't want to be telling you this because, I want things to go up as much as everybody, but this is my job to kind of report these things. And to give some meaning to it in context, because you can go out there and listen to a dozen YouTubers, and I'll pick and choose what I listen to in the mornings, but it's a matter of what to pay attention to. And a lot of the value that I think that I bring is kind of what to ignore and what to pay attention to. I was thinking about something this morning, though, and before I forget, I do want to mention it. Let me sidebar for just a minute. I believe, and mark my words, you guys remember this, in 1, 2 years time, 3, 4 year, 5 years time, things are going to be very different. And I think that the market maker algorithms now, the AI algorithms now, are in learning phase. They're learning us, they're learning humans. How do we react to things? This is important. And similar to doctors, nothing against doctors, but they go to school, they go through years and years of medical training. They're taught all of these things, and later in the face of new information, it's very hard for them to adapt to that, because a lot of their who they are, their status, and their sort of, Japanese call it ikigai, their reason for being, is inside of this realm of this circle, this ball, this sphere, let's say. And so they're going to protect that. And humans, we do that. We sort of, consistency of commitment and confirmation bias. So I don't want to say that it's a trick, right? So these AIs are in learning phase. If you've ever run ads on Facebook, when you first run your ads, it'll say, okay, learning, okay, and the AIs there are learning. They're showing the ads to everybody. The targeting used to be like, I want to show my ads to crypto investors, aging male baby boomer, blah blah blah, just who like this, who follow that. None of that matters anymore. The AI in Facebook is just, it has 1,000 data points on all of us. So when you put run ads, it goes in the learning phase, and it's learning who's clicking on the ad, who is interested in this ad, who's potentially buying this ad based on the pixel. And once it comes out of learning phase, it's like, all right, I got this. Here's the ad. I'm going to show it to this person and that person, that because they're most likely to be interested in buying. Nobody's talking about this, but I think that's where we are right now. And so everything that's worked in the past for us, charting, as traders, a lot of who we are, who are being our kind of locus of control, and so these are some psychological terms and things, but our sort of ikigai and all of that, you've done hours and hours, tens of thousands of hours of learning and technical analysis and all these things and CPI and all of that. You may be ready to throw it out the window because these AIs are watching and learning us, and it's a very hard time to be trading right now because it is learning us and saying, hey, all we have to do, they're not prescient yet, hopefully. All we have to do is they just push price up here, and then those dumb humans are going to think it's going higher. Like right in here, we had these two pumps. And I'm not saying this was exactly the AI, but anyway, just hear me out. Hear me out. So basically, push up to this level. They know all these humans are going to go buy long, and then they wipe the table, liquidate everyone, take it down again. Then they say, hey, that was fun. Let's do that again. So the price comes all the way down here. They know as dumb humans, which are basically slightly as evolved monkeys, are going to start shorting this thing. And then they go, okay, let's grab all those chips off the table. All we have to do is push price up again above this orange line, this 21-day exponential. But for some reason, those humans like that. We'll just do that. And then they'll all go long, and then we'll dump it again, and we'll take all that money for the profit, for the insert here, hedge fund institution, the beneficiary. So that's where we are now, I think. But I think it's still in learning phase. And it's dangerous for us because we're not going to be able to outsmart this thing. Now, I don't want to freak everybody out. I think we're going to just have to be a little bit more cautious and contrarian and have that in the back of our mind. So that, and then this candle here, when we push up strongly and people all over were like, we're back, it's the bull market's back, baby, time to go in. And I was like, I don't trust this at all. Also, that was on a Sunday and it pushed right up to this. These are the things I want you to learn. These are teachable moments. And I know it's a lot to sort of, make it all fit, but all I can do is keep telling you these things, sharing these things, and hopefully it's rewiring your brain at some level. Because look where it pushed right exactly up to the 50-day exponential moving average and rejected. And it came all the way back down. And it came even further. And then it bounced again. So again, use that ice analogy, the thick ice, the thin ice. I think most of you have heard that before. If you haven't, let me know. I'll cover it again. But we've talked about that ad nauseum. Now, if you're ever at any point sitting there saying, "Ah, Jesus, again, Brett, we've heard this before." Good, good. You don't understand something until you can explain it to someone else so that they understand. That's why in corporations, when they have their mission and vision and all that stuff, and they repeat it over and over again until you're blue in the face, they're blue in the face, and you're sick of hearing it. That's what they want. They want you to internalize it, and the reason I do it is so that you remember these things. All right. So, and again, I like to keep things simple. So, oftentimes you'll see me drawing these lines, and I, really try to be careful not to draw lines in the sand, because if you throw enough lines and spaghetti on there, some of it's going to work. Like that Fibonacci circles guy, who's wrecked more traders than anyone I know. But some of it's compelling. He puts these Fibonacci circles all over the place, and people are mesmerized by it. Anyway, this here, you can draw these midpoint trend line resistances, resistance, resistance, resistance. So basically, we're not in great shape right here. And probably will come down lower. And where this, round and round she goes, where she stops, nobody knows. And so I am not buying more Bitcoin. I will, here are the validations and invalidations. I would buy Bitcoin at 71,000. 70K would be a great buy. Some people are saying 74K because, that's the prior kind of top here, and that's valid-ish. We don't know. I think probably the more careful thing is to wait for a bounce. But back to, think of it as, I don't know, what's a good analogy? I guess most of us are of age. Remember Animal House. You remember John Belushi had the angel and the devil on their shoulder, talking in his ear. And, or if you want to use a more PG-13 version of it, the Men in Black, where the guy had the little head growing out of his shoulder saying, hey, you should go do this, the alien. So that's kind of, we should always be in the back on our shoulder saying, hey, but wait a minute, what do you think, what's the contrary in play here? And the AI, because the AIs are emotionless and they're learning us, kind of like an alien. I know, I'll get back to the point here. But so my tried and true TA would tell us we drift down in this downtrending channel over the next couple weeks, and I've heard more evidence suggesting later in March we go higher. Inflation seems to be somewhat under control. Those cycle traders that were saying, and nothing against them, but it didn't really happen necessarily. Was this the daily, weekly cycle low? We don't know. What we need to look for is a higher low to kind of get back above this resistance, above 85K. And I'm going to draw an alert there. I recommend that you do too. And the crossing up 85K as a potential what, you guys? Potential reversal, but also potential fake out, right? Just remember, this AI, it's learning us. These AIs are becoming very, very smart. It's scary. It's a bit scary. Let's give one a machine gun. What could possibly go wrong? And they're doing that. They have these AI things. I'm going down a rabbit hole here. By the way, I will be Friday attending an AI kind of high-level mastermind thing in Miami as part of a group that I'm in. But if you haven't heard yet, they have people building entire companies with AI agents. An agent is an AI bot specifically trained to do one repetitive task. They have another agent that will review the work of this AI bot, and then they're replacing entire company structures with AI agents that are self-learning and autonomous. So it's an interesting times to be alive for sure. Hey, this is Brett from Moonstream. If you'd like to learn more about our pro trading signals or our live classes every Wednesday or our Retire Rich program, go over to moonstream.io/start.